Time for the word on Wall Street. Top investors watching your money this morning. Joining me now, Up Holdings founder and portfolio manager Robert Cantwell, Mahoney Asset Management CEO Ken Mahoney, and Walser Wealth Management President Rebecca Walser. Ken, let me kick it off with you. Futures are up this morning ahead of the personal income and spending numbers out at 8:30 a.m. Eastern Time. Economists are expecting the month-over-month change in the core PCE to be up 0.3%. Year over year, up 4.9%, but that is slipping from the previous year over year reading. Ken, what are you expecting from today's data and any potential market reaction?
Well, hopefully it stays in line. Again, we're getting sick of these inflation numbers, but I have to tell you, the market feels a little different, especially from a week ago where we had that reversal of fortune, with the Dow and S&P, NASDAQ, and so forth. But the S&P 500, well, it kissed the bear market down 20%. And almost at that moment, reversed on Friday, and we had a follow through this week, Monday, Tuesday, and here we are again, having higher futures. And usually, just a couple of weeks ago, having strong futures was inviting sellers. But I think a little bit sentiment changed that maybe we priced in, again, a crash landing with the economy or more inflation. And also the way the earnings have gone. And NVIDIA, I think, is a poster child for this week where they missed their numbers. They were lower in after-hours trading. Futures were dragged down a bit. And yesterday, we saw a reversal there. And actually, they bid up NVIDIA 10 points. And so it does seem like a different atmosphere, Dagan, and hopefully we can kind of keep this mojo going for some time. It's probably a bounce in a bear market, but we'll take it after 8 brutal weeks of selling.
Rebecca, hedge fund billionaire Bill Ackman calling on the Federal Reserve to be more aggressive in its fight against surging inflation. Ackman tweeted this, quote, "The only way to stop today's raging inflation was with aggressive monetary tightening or with a collapse in the economy." Rebecca, don't those two go hand in hand? Aggressive monetary tightening causes a recession, but your reaction to what Ackman is preaching?
I think, unfortunately, to not let any of the air out of our great balloon of the market that we've had this week. We've all enjoyed this week so much versus the last 8 weeks. But I agree with him, Dagan. I mean, the Fed has got to get this under control. And if you look at this week, if you look at the turn in the week, where we really made the turn was after the comments came out that, hey, we might not, keep raising after June and July. So basically, the market said, wow, we might go back to dovish and not hawkish. And that's exactly what he's honing in on here. The Fed's, tone changing, and the market has loved it, as we've seen. And the market will always love accommodative policies because that means easy credit and a lot of investment R&D. The market goes up with easy money. We know that, but now we're paying for the pain of Corona. And the soft landing is very difficult, as we've seen. And unfortunately, the market swinging on the Fed being a little bit more accommodative than had originally been expected is not going to be sustainable. So unfortunately, Dagan, I agree. We are still in a corrective period, and I don't think we've seen the bottom quite yet, unfortunately.
Before I move on, how would you position a portfolio given that?
It's very difficult. So if you've got longer term investors that want to, have a long haul, you can obviously, bear through it and not time the market because we can't do that very well. But for the investors that are already retired that really can't sustain longer, shortages, we have to look at commodity buys. We have to look at things that can hedge through this downtime.
Robert, pending home sales sliding for the 6th straight month, falling 3.9% in April. This is mortgage rates did drop for the second week to 5.1%. Meantime, according to real estate brokerage Redfin, the number of new home listings rose twice as fast during the 4 weeks ending May 15th compared to the previous year. Robert, your take on the housing market and its broad impact on the whole economy?
Sure. Well, housing and energy have been the two categories that have really performed the best this year. And that's not too surprising given what's happened with inflation. Those are our real asset categories in housing and energy where you see prices go up when inflation's been as bad as it is. Now, the challenge is with everything else being so bad, the S&P 500 down 15%, the NASDAQ down 25%. What we've seen on the housing side is a lot of it has actually been driven by supply more recently. So as families have had fewer places to turn to tap their wealth to deal with inflation, the performance of their housing has actually been one of the strongest performers in their portfolios. And so when you saw the pending home sales numbers down, when you saw some of the price softening in April, a lot of that had to do with more sellers than expected coming to market in the month of April. Now, this very well could be a blip in the long-term trends for housing because the U.S. as a whole is still significantly behind on its housing stock relative to its population size 10 or 12 years ago. So we'll see in these coming months, as you mentioned, with mortgage rates coming down, and with stocks like Google trading below 20 times free cash flow, which is something you really don't see for a while, or you haven't seen in a very long time. We're not so sure that housing and energy are going to continue to be the outperformers over the next 12 to 18 months and potentially an inflation environment that's starting to cool off a little bit. So we're certainly focusing on equity prices here and excited about some of the stocks we see.
Before we go, Robert, you mentioned Google. What other stocks are they mostly in technology that are trading at such a, by your estimation, a reasonable price here? Because I can't get past what happened with Target, and it was about a week ago. But that was a stock where investors clearly did not anticipate the impact of a large retail corporation trying to manage through inflation, where you had that stock in 2 days lost almost a third of its value, which is unheard of for a company of that size. So where are you looking other than, say, Google?
Sure. Yeah, retail stocks have had a really tough go of it. Even Amazon, even the e-commerce companies have had a really hard first half of the year. What we're seeing in the tech universe where things are going really well is in cloud software. So this is AWS, this is Azure, Google's Cloud, Datadog, Snowflake. There's a long list of companies whose primary product is selling cloud tools and infrastructure to companies. And these businesses have shown incredibly resilient fundamentals, and they've sold off with all the other technology companies that have sold off at the beginning of this year. But the reality is their fundamentals have continued to be driving up. And so that's been the area where we've been allocating a lot of our new investor capital because we've been seeing the most interesting prices.
Robert, great to see you as always. Robert Cantwell and Rebecca Walser. Kim Mahoney, stay right there. You're with us all morning long. Thank you all so much.